units within an organization that incur costs but do not directly generate revenue. The primary function of a cost center is to monitor and control the expenses associated with a specific area of the business, ensuring that the organization operates efficiently. Cost centers are essential in managing a company's internal costs and helping allocate resources effectively. Key characteristics of cost centers. 1. Non-revenue generating. Cost centers are not responsible for generating income. Their focus is on managing costs. 2. Expense control. They play a critical role in budgeting and controlling expenses for specific functions. 3. Segregation of costs. Costs are separated into different centers to track spending for each business unit or department. 4. Managerial responsibility. Each cost center typically has a manager responsible for overseeing its expenses and ensuring cost efficiency. Examples of cost centers. Human resources, HR. Responsible for recruitment, training, and employee management. Though HR does not generate revenue, it incurs expenses related to salaries, benefits, and employee programs. IT department. Provides technological support and infrastructure for the organization. While it incurs expenses such as software, hardware, and salaries, it does not directly generate revenue. Customer support. Handles customer inquiries, complaints, and support, incurring costs related to personnel and tools needed for assistance. Facilities management, responsible for the upkeep and maintenance of the company's physical spaces, such as rent, utilities, and repairs. Importance of cost centers. 1. Budgeting and cost control. Cost centers enable businesses to budget for specific departments and track whether they stay within the allocated budget. 2. Performance evaluation. Managers of cost centers are held accountable for controlling costs, leading to greater operational efficiency. 3. Improved decision-making. By analyzing cost centers, companies can identify areas where expenses can be reduced or resources can be allocated more efficiently. 4. Resource allocation. Cost centers help organizations allocate their resources to essential operational areas without sacrificing performance or quality. Types of cost centers. 1. Production cost centers. These centers incur costs related to the manufacturing of goods. Examples include machinery maintenance or factory management. 2. Service cost centers. These centers incur costs related to supporting production or administrative functions such as the IT department or customer support services. 3. Administrative cost centers. These involve costs related to general administration such as finance and HR departments. Cost allocation in cost centers. Costs are allocated to cost centers based on their activities. The allocation can be direct costs, costs that can be directly attributed to a specific cost center, such as salaries or departmental supplies. Indirect costs, costs that are shared across multiple cost centers, such as utilities or administrative overheads, and need to be distributed using an allocation method. Role of cost centers in decision-making. By segregating costs into distinct centers, management can identify which areas of the business are cost-effective and which need improvement. Make informed decisions on where to invest or cut costs. Set performance targets for managers of cost centers, motivating them to operate more efficiently. In summary, cost centers provide organizations with a structured way to monitor and manage expenses, ensuring that costs are controlled, resources are optimized, and overall financial performance is enhanced.